Hello again, YouTube. This is ST with ST's Silver Stacking. In this video, I am going to discuss using dollar cost averaging when you build investment portfolios, but more especially how it applies to silver and the precious metal market. In its simplest form, dollar cost averaging is where an investor invests a set dollar amount at a set time interval to build a position that in theory ensures that more units are bought at the lower cost than are purchased at the higher cost. With the stock market, this can work. It does have a risk that the silver market does not have. In the stock market, a stock can go to zero. A company theoretically can become worthless. So one can dollar cost average all the way down and lose his or her investment. Unfortunately, in my younger days, I did exactly this. When the stock started going down, I started buying more units, same dollar amount at the same intervals. But those additional units were worthless to me. Silver, you always going to have a residual value. The silver is never going to go away. You have it. Now, one thing people that make videos like I do and put me at the front of the line about being guilty, so I'm not throwing stones at anybody else that's made videos, I'm throwing at myself the same stones. Sometimes we believe so strongly in silver, we unintentionally give the impression, go out now, buy silver, buy it hard, and you're going to be fine. Silver has a market that is somewhat volatile. Now, I'm going to give you an example. I'm a tax accountant. I prepare taxes for a new client. He came into my office. He asked me about a capital loss. What had happened when silver was going up, 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 he had to have it. Everybody told him, you have to have silver, jump on the bandwagon. He bought a substantial amount of silver. Unfortunately, he bought somewhat near its high. He bought it at one time. Several years has since elapsed. He sold it. He sold it at a substantial loss. You can lose with silver if not done correctly. Now, was silver a bad investment? No. Was his entry point bad? You bet you. So there's only two prices that matter. The price you buy it at and the price you sell it at. Now with silver, I do what I term a modified dollar cost averaging approach. What I do is based on the spot market. From even dollars in the spot market, I have a base amount I buy silver at. Every week I invest X number of dollars in silver. If the price goes down, I buy more units. For silver, obviously an ounce is a unit. So as it becomes cheaper, I'm able to buy more. As it becomes more expensive, with the same dollar amount, I'm buying less. Over time, I take advantage of the volatility and build my position with lower averages than if I try to generally guess the market. It's very dangerous to try to guess the market on fluctuations. You'll be disappointed, I'm afraid. However, I modified this approach. I also invest in other investment vehicles. Silver is not my exclusive investment. However, as silver declines in value, I allocate more dollars to silver so I can increase my holdings at the lower cost. As it climbs, there's a certain dollar amount on the spot market that when it passes it, I will no longer allocate additional dollars. If it continues to slide, I will continue to allocate additional dollars to the base amount I invest. Now, I have a dealer that I'm very good friends with. I buy from this dealer constantly. And she told me something very interesting. When silver was going through the roof a few years ago, everybody was in the place. She ended up having to set up a take a number system. She could not wait on everybody as fast as they were coming in the door. Everybody likes to chase something going up. The problem is, what spikes up can reverse on you, and you're left like the guy did the taxes for, holding a large amount bought at an inflated price. I take the opposite approach. There is a price of silver. I will not buy once silver exceeds that price. I will wait till it comes back down into my buying range. I hope this helps with dollar cost averaging. Don't get scared and go out and buy a huge bulk at one time. You may be entering the market at too high a price. Now, for my next video, it's going to be a little different. I'm going to make a video on why I am making these videos. Hopefully let you guys understand a little bit more where I'm coming from and why I'm doing what I'm doing. This is ST with ST Silver Stacking. God bless you.